Insurance policies, they're just packed with this dense legal language, right? It can make your head spin. But buried in all that text is this super important safety net for both you and your employer. So today, we're going to cut right through all that complexity and figure out what a workman's compensation policy really means.
Okay, let's make this real for a second. Picture this. You're a driver for a company. You're on the job, doing your thing, and then, bam, an accident happens. So who's on the hook for your medical bills? What about your salary while you're out recovering? Well, the answers to all of that are right here, in the policy we're about to tear down.
All right, here's how we're going to tackle this. We've got 5 key parts. We'll start with what this insurance even is, then what it covers, what it doesn't cover, the exceptions. After that, we'll get into how it all works, and finally, we'll look at the fine print. I promise, by the end of this, you'll have a super clear picture of how this whole safety net is put together.
All right, first things first. What exactly is this policy? The easiest way to think about it is like a protective shield. And it's a shield that's designed to defend both the company and, of course, the people who work there when something goes wrong on the job.
So here's the official definition. But let's break it down. It's basically an insurance policy that covers an employer's, and this is the key phrase, legal liability. If you, as an employee, get hurt or sick because of your job, your employer is legally on the hook. This insurance? It's what covers that responsibility.
And this really gets to the main goal here. I mean, yes, the employee gets compensation, which is absolutely essential, right? But the policy itself is really built to protect the employer from what could be a massive financial hit. So it's a shield for their legal and financial obligations.
Okay, so what does that protection actually look like when we talk about real numbers? What actually gets paid out if a claim is made? Let's dive into the specifics.
The first big number you need to know is this, 150,000 birr. Now, according to the policy, that's the absolute maximum amount the insurance company will pay out for any single event. Think of it as the ceiling, the total cap on what the insurer is liable for. And it doesn't matter if 1 person or 10 people are affected in that one incident.
So how is that money actually divided up? Well, the policy has a really clear scale of benefits. In the awful event that an employee dies, the compensation is 5 years' worth of their wages. Now, for a permanent total disability, we're talking an injury so severe you can never work again, the payout is 100% of that death benefit. And for a partial disability, say losing an eye, it's a percentage of that total. In that specific case, it's 40%.
But what if the injury is just temporary? If an employee is completely unable to work, but they are expected to recover? Well, in that case, the policy provides a percentage of their monthly wages to help support them. And that coverage can last for up to a full year, or 52 weeks.
And on top of that, there's a separate allowance for those immediate costs. The policy gives up to 1,200 birr per person for things like medical bills, hospital stays, and even funeral expenses. And what's really important to know here is that this is paid in addition to any of the other compensation we just talked about.
Okay, so we've seen what the shield covers, but, it's just as important to understand where that shield has some gaps. So what are the exceptions? What's explicitly not covered by this thing?
This really draws a super clear line in the sand. An accidental injury that happens during work? Covered. But if the injury is self-inflicted, or if it happens because an employee was fighting or was under the influence of drugs or alcohol, then the policy won't pay out. Simple as that. The coverage is really for accidents that are a direct result of the work, not for intentional acts or, reckless personal choices.
And there are some other big exceptions to be aware of. The policy won't cover things that come from huge events like a war. It also doesn't cover a contractor's employees. They're expected to have their own policy. And here's a really interesting one. It's subtle but super important. If an employee was warned in writing about a specific safety rule, and then they have an accident because they broke that exact rule, yeah, the claim can be denied. It really just reinforces that both sides have a responsibility to keep the workplace safe.
All right, so we've covered what's in and what's out. Now let's get into the nitty-gritty of how it all actually works. What are the sort of day-to-day mechanics of the policy? So here's a really interesting question, and it kind of gets to the heart of how insurance works in general. Why can't a business owner just insure, say, their high-risk employees, the drivers or the people working with heavy machinery, and just leave the office staff off the policy? Well, the answer is a core insurance principle called anti-selection. See, for the whole system to work financially, insurers need a balanced pool of risk, a mix of high-risk and low-risk people. If employers could just pick and choose to only insure their highest-risk employees, the insurer's costs would just go through the roof.
So to prevent that, the rule is dead simple. The policy has to cover every single employee, from the driver all the way to the receptionist. No exceptions. And the way they figure out the cost, the premium, is actually pretty cool. It's not a static thing, it's a dynamic process. Here's how it works. At the beginning of the year, the employer gives an estimate of their total wages for the year. The initial premium is based on that number. But then, at the end of the year, they have to declare the actual amount of wages they paid. If that actual number was higher, they have to pay a bit more. If it was lower, hey, they get a refund. It's a system designed to make sure they're paying a fair price for the risk they actually had, not just a guess they made a year ago.
And that brings us to our final piece of the puzzle, the fine print. You know what I'm talking about. These are the conditions, the absolute rules of the road that both the employer and the insurance company have to follow to make sure the contract stays valid.
So the employer has some really big responsibilities here. For starters, they have to actually try to prevent accidents and follow all the safety laws. They've got to provide those correct wage records for the premium adjustment we talked about, and this next one is absolutely crucial. If an incident happens, they have to give the insurer written notice immediately. And listen to this part is so important. The employer is not allowed to admit fault or offer or promise any kind of payment on their own. Why? Because doing that could totally mess up the insurer's ability to handle the claim legally.
But it's not a one-way street. The insurer has rights too. And one of the biggest ones is the right to have their own doctor examine the injured employee, pretty much at any time. It's a verification step, right? It lets the insurer confirm what's going on, the nature and the severity of the injury before they pay out a claim. It's all about making sure the system stays fair and works the way it's supposed to.
Okay, let's wrap this up and pull it all together. What are the big takeaways? First, remember this policy is that protective shield, and it's mainly there to cover the employer's legal and financial liability. Second, that shield has limits. There are hard financial caps and really specific exceptions, so it definitely doesn't cover everything. And finally, the whole system really hinges on both sides playing by the rules, especially when it comes to reporting wages correctly and, of course, giving immediate notice when something happens.
So there you have it. We've deconstructed all that dense language and laid out the mechanics. From the driver out on the road to the manager back in the office, this policy creates a whole framework of responsibility and protection. And that leaves us with one final question for you to think about. Now that you can see all the moving parts, how strong is the safety net where you work?